all eyes are going to be on that big jobs number that comes out tomorrow. But Brian, it's September 1st.
Yeah.
Right? I mean, decline's continuing, clearly, but certainly things that a lot of investors trying to analyze how things are shaping up for the month.
Yeah, and for what it's worth, if we just take a look back at the month of August, it was a rough one, to say the least, right? When you take a look at the S&P 500, the NASDAQ, the Dow, all down over 4% over the course of that month. A lot of that thanks to Jay Powell and crew repricing market expectations over what the Federal Reserve is going to do in the future, which, based off of last Friday, is going to be more rate hikes and more aggressive ones at that. Now, the challenge here is that this coincides with market stats that show September is historically a very rough month for the indexes. When you take a look at, for example, Callie Cox over at eToro, pointing out that this is a slump month for stocks. It's historically coincided with about a 0.5% contraction. And Ryan Dietrich, who we had on the show earlier over at Carson earlier this week, he has brought up the point, too, that the calendar doesn't do us any favors, specifically when you consider months where the S&P 500 is down over 15% year to date headed into the 9th month of the calendar. That has often coincided with, in some cases, double-digit declines. Whether or not that actually is the case this time remains to be seen, but a lot of investors probably very, very cautious with the calendar flipping over to September.
Yeah, I mean, especially given what we saw in August, if we're hearing analysts say that things could get a lot worse here. I mean, it really does all come down to the Fed, though, right? I mean, at the end of the day, it is about how strong inflation is, the Fed's reaction to it, whether it's going to be 50 basis points, something a little more aggressive. But it does feel like right now where the market is right now, it all comes down to that. It is going to be moving on that. Obviously, when the jobs number comes out tomorrow, a lot of it will be, well, yes, if it's a strong number, that's not necessarily a bad thing in the context of Americans being employed, having those jobs, and yet it will point to the fact that the Fed's rate hiking hasn't necessarily had a material impact or a significant impact.
Yeah, and this feels like, look, every month is important. Every data point, economic data point is important. But September does kind of feel like it's going to be a pivotal month from the perspective that last month, a lot of market expectations and even economic commentary was that maybe we had seen the peak of inflation. Maybe the story was going to start to change on a recession happening in the United States, and that would force the Fed's hand into rate cuts at some point. Again, we've been repricing a lot of that based off of what we've heard from Jay Powell as of the last week or so. But the story does remain the case that you look at the manufacturing numbers that we got from the ISM this morning, it's kind of mixed. Construction spending is contracting. We are seeing signs of slowdown in this economy, but we have not seen that spill over to a recessionary kind of dynamic in the labor market where things are very strong. Again, we'll see what the data tomorrow looks like. But that could all change in September, which means that by the time we get to the first day of October, wake me up when September ends, it could be a very, very different picture. That could be very pivotal.
Yeah, cue the song, right? We'll cue the song.
Oh, I love that song.
Okay.